Well, hello traders and investors. My name is Roger Scott. Today is December 28th. I just got back from Miami. I had an amazing holiday weekend with my family. I actually posted some pictures on Facebook. Anyways, let's get into it right now. It's going to be a very fragmented week. Why? Well, this is a New Year's Eve holiday weekend, one of the biggest holidays of the week. A lot of people take off between Christmas and New Year's. It's not even going to be a full week. That means most hedge funds, most institutional, most retail traders are taking today off. They are off, which means you're not going to have a huge, broad market action. You're going to have a thin, narrow market. So don't expect anything major. We're way past the Christmas rally. Retail sales were bad. Jobless claims were bad. And this week we've got some news, but I don't think it's going to be as instrumental as the holiday trading season. So the big reports for the week is going to be jobless claims and pending home sales. Those are going to be the big reports. We've had some downside, beginning of a downside, starting to see potential cracks in the housing market. Potential. Doesn't mean usually things slow down before New Year's, but it is slowing down. Housing starts were just amazing. New home sales, resales, mortgages, things were going really well. Why? Because people want to lock in their low rates. They want to buy homes with these low rates right now. There's a huge influx of home buying right now. So it may be cooling off, but it may be cyclical because of the holidays. It's going to have to wait another month or two till we really see it. But jobless claims. This is going to be a big number again for the week, and I don't think it's going to have a big impact this week. But look at this number. The 4-week moving average is back to 818,000. Folks, that's 818,000 new claims every week. That's bad. We dipped our toe into the higher 600 range, and then we went back to the 800,000. And I'm not happy with what we're seeing. I'm not happy at all with what we're seeing. Now, on the market side, on the actual trading side, markets are up like crazy right now. The Dow's up almost 200 points. The Nasdaq is up almost 100 points. Why? Well, because Trump finally signed a $900 billion aid package. So global stock market, U.S. futures are higher right now as President Trump signed a $900 billion economic package to help reduce uncertainty as governments are reimposing travel and business curbs in response to a new COVID variant. Frankfurt had one. Australia here has one. It's not pretty, folks. And again, most healthy people that make an impact, that make a dent on the economy, are not going to get the COVID vaccine till next quarter, which means January, February, March. Jobless claims are going up. Retail sales are not moving higher. We're only getting a couple of $100. I mean, maybe a couple of $1,000 from the government. What's going to happen over the next 90 days? That's my concern. That's what I'm afraid of. So Trump signed the measure, which also includes money for other government functions through September, despite expressing frustration that $600 payments to the public weren't bigger. His signature following last-minute objections to help to clear away uncertainties as reinstated travel and business curbs threaten to weigh in on global activity. Folks, I'm telling you right now, I don't know how far this money can go. Investors have been encouraged by the development of COVID vaccines, but that optimism has been dented by discovery of more contagious variant. And again, as I'm reading this, keep in mind, even for the first variant, we're not getting relief for at least another 3 to 4 months. And that's the problem. That's the problem I'm having. Can the market sustain these levels before we actually get the vaccine? Because we already are seeing a lot of cracks, like jobless claims. Hello. 935. Folks, that's going back to last March, April, May levels. That's not happiness. So again, I'm very concerned about that. On Monday, South Korea reported its first case of a new variant in 3 people who arrived from Britain. Oh, here we go again. Over the weekend, Japan also reported cases and reimposed limits on entry. And I was just in Miami, and I'm going to tell you, folks, everybody's wearing a face mask. There's a lot of restrictions there. Businesses are pretty, I got to say, businesses are pretty happening. Restaurants are busy, but it's the holiday. But I'm telling you, folks, there's a lot of pain right now in the world, and I don't know how much this $900 billion is going to really help. Because look, if you had this kind of news a year ago, you would have seen the Dow Jones up 500, 700 points. So this isn't anything that great. And let's see how it ends today. All right. So I'm not really that happy. Overall, if you look at the overall stock market, let me just quickly show you what we're dealing with here. We're dealing with grossly overbought price levels. Grossly overbought price levels. I mean, look at this thing. This just continues moving and moving and moving higher. And again, I'll show you the momentum levels. I usually have them up here, but I'll put them on here for you. I use 10 days, 70-30 for RSI, Relative Strength Index. And you could see right here. Let me just go a little further here. See that? Lower highs. Oops. Lower highs. That's bad. That's very, very bad. And we're seeing the same thing with the QQQ. Higher highs on price, lower highs. Higher high on price, lower highs on momentum. This is very, very bad, folks. And I think we're going to hit the 50-day and possibly the 200-day moving average before moving up much higher. So you need to be defensive. I don't think this aid package is going to do what most people think it's going to do for the market. Why? Because reinfections with new strains are starting to move in. And again, I know we hear this vaccines. Healthy people around the world are not going to start getting the vaccines for the most part, especially in the US, till April, May, and June, which means we have a full quarter, next quarter, of viruses moving higher. This package that the government gave is already on the table. Market's only up 178 points. What's going to happen with the broad market? So I am not really happy about that. But in light of everything, I've got two stocks that I think are going to do well, regardless of what happens. First one is Evertech Inc., EVTC. Now, let me give you a little profile of this company. And Russell 2000. Notice Russell 2000. I like things in the Russell 2000 right now. Another thing, engage in transaction processing businesses in Latin America and Caribbean. Folks, global economy tends to rise when a Democrat takes the house, takes office. Look at emerging markets. Look at this. Let me show you this. EM. Look at this ticker symbol. Oh God, I got the wrong symbol. Sorry, I get carried away. Emerging EDD. Here we go. Sorry. Let me show you this chart. Look at emerging markets. They've been really moving. Look at VWO. Look at this. Emerging markets are moving right now. So I like this stock. Oops. I like this EVTC. And I like the fact that it's cash processing in different countries. Now, if you look at price action, you will see it has a 90-10 setup. 90-day high, 10-day low, and moving higher again off of new highs. That's very positive. I like the fact that it's a Russell 2000 stock, not a large cap. And I like the fact that it's in a global economy, not literally in the US, because global economy looks to be picking up right now for the first time since the election, or since debates actually. So I like global economy. I like the fact that it's a Russell stock. I like the fact that it's not focused on what's going on in the US right now. And I like this pullback. So I would be buying it right above the current price level, putting a stop loss right here below the swing low. On the upside. On the downside, I like pets. This company has not been doing really well. If you look at what it does, it prescribes pet pharmacy. Well, people are cooling off on pet pharmacies right now. People can hardly deal with pharmacy for adults, normal people right now. So the stock has been struggling. Now, it had a 90-day low and a 10-day high. And once it goes below the 200-day moving average, notice the highs, all-time high, lower high, lower high. It's not looking pretty right now. It hasn't been able to trend along with the market. So I would be selling it right below the swing low, right around the 33.50 level, and putting a stop right around the 35 level. That's what I would do on this stock. Ticker symbol PETS. Again, pet subscription services like Chewy, I think are going to do really well. Pet subscription services. This is not a pet subscription service. So I don't think they're going to do as well. And if they become a subscription service, they're not doing something right, because like Chewy, There's another company, Pet something. It's on the tip of my tongue. I've been talking about it nonstop, though, for the last several months. But anyway, the point is, this stock just does not look all that great. And if you look long term, it looks like it's in a downtrend right here. Come on, I can't draw anything to save my life. Look at that. It's in a downtrend. Doesn't look that great. Lower highs, fade, closing on the low, fading to high, moving down. I would sell this sucker right at the 200-day moving average, or right around there. Ticker symbol PETS, and the one I like long is EVTC. Now, before you go, I've got something important for you. Folks, there's one hidden market that explodes in the first year of a new president. I'm not kidding about this. It doesn't matter if it's a Republican or Democratic president. All that matters is that you know about it before January 21st. That's the key. That's why I'm hosting my third annual Turning Point event on Thursday, December 29th at 1 p.m. Eastern Time, to give you the inside scoop on my #1 way to maximize your profits in 2021. The explosive market hidden inside your brokerage account that I'm about to reveal could give anyone the opportunity to earn 153% on their money, like the last 2 times a Democrat stepped into office. Who wouldn't like to make 153%? I would. Hey, the opportunity's there. Click on the link below. Learn how you could see this repeat profit phenomena in action. Folks, we were right on the spot last year during Turning Point. You don't want to miss this year's. It's like we had a crystal ball. And this year, it's not going to be any different. I'm going to open up your eyes to things you've never seen before. There's going to be some hard numbers, hard data. You're going to learn a lot of goodies. And I don't care if you're a Republican or a Democrat. I'm going to show you a way that you can potentially make money in 2021, regardless of your political affiliation, all right? Forget politics. Let's talk about money. 153%? Who wouldn't like that, right? That's what we're talking about. Big triple-digit gains, smaller gains, consistent gains, big gains, all type of gains. Don't miss out. Click on the link below to learn how you could see this repeat again and again and again. You don't want to miss out, and I can't wait to be there with you December 29th at 1 p.m. Eastern Time. Bye, guys. I'll talk to you soon. Follow the link below. Bye.